Hello and welcome to the most serious crypto news, and in today's episode we will look at why investors expect $80,000 for Bitcoin in the near future, BlackRock's staked Ethereum, how to lose $50 million in just 1 minute and even more. But before that, let's take a look at current prices. So Bitcoin has confidently gained a foothold of 70,000 and now the price is $72,420. Against the background of the news from the US, we continue to grow, and from the point of view of technical analysis, everything is even better. The to the moon pattern has formed, which means we are waiting for the race really soon. And this is not a financial recommendation, don't forget about that. Everything is great on Ethereum too, and we finally broke through 2,100 level after the breakout. The price retested it and flew up again. The current price is $2,132. Now, let's get to the news. Option traders bet on Bitcoin hitting $80,000, and while Bitcoin is stabilized at 70,000 and it's pleasing the eye with green candles, traders in the options market are already looking into the summer and they are betting on new heights. According to Derive XYZ, the probability of the first cryptocurrency rising above $80,000 by the end of June is estimated at 35%. The mood has changed. The options bias has changed from the negative to the positive, and sales of put contracts have increased, and of course the capital is gradually flowing into calls. Over the past 24 hours, the growth rates accounted for more than 40% of all transactions. It seems that investors believe that the worst stage of the fall is finally over. But not everything is so rosy. Some major players are still hedging against macroeconomic uncertainty. A deal with options for $130 million has been recorded, with the expectation of falling to $65,000 by the end of March. And analysts warn that current inflation reports do not yet take into account the jump in oil prices to $100 per barrel. And the March CPI may come out as a surprise. The Fed will be caught between a rock and hard place before the March 18th meeting. In the meantime, Bitcoin is confidently holding in the range of $62,800 to $72,600, and inflows of ETFs are recovering. Glassnode notes that the market is moving from a forced liquidation phase to stabilization, and short positions are overheated, which creates the basis for a potential short squeeze. In general, we are waiting for the jump. Crypto trader loses nearly $50 million in AvaTrade. Protocol offers a $600K fee refund. And yesterday, some crypto whale decided to exchange $50.43 million in Ethereum USDT for Ava tokens via the protocol interface. But in the end, instead of $50 million in Ava, he received $36,000. And that is, he lost $50 million in just one transaction. And this is not a hack, not an exploit, not a scam. It's just a classic slippage which devoured 99.9% of the amount because the liquidity pool was not ready for such a huge mammoth. And the funny thing is that the interface honestly warned the poor guy twice about extreme slippage and required him to check the box confirming that he was aware of the risks. And the user apparently, without reading it, ticked the box and confirmed the transaction. The system worked well. CoffSwap, through which the routing went, just spread its hands, and this is the specification of the order. We have nothing to do with it. As a result, the most of the funds ended up in MEV bots, and Avi team is now trying to contact the victim to refund him about $600,000 in fees that went to the protocol. But the main $50 million, alas, has flown into the blockchain. The conclusion: read the warnings before swapping $50 million, you know? If you like my content, don't forget to like up this video and subscribe to the channel, and this way you won't miss the next news yourself and will help my channel grow. Wallet provider Exodus reports $11 million in 2025 net loss despite a record revenue. The popular wallet closed 2025 with a net loss of $11.4 million, although a year earlier it proudly reported a profit of $113 million. And the main reason is the revaluation of digital assets, minus $18.9 million versus plus $96.1 million in 2024. At the same time, revenue even increased by 5% to a record $121.6 million, and the XOSwap B2B platform traded for a $6.89 billion or plus 21%. But the bear market does not spare anyone, even those who make convenient wallets. As of December 31st, Exodus has $161.6 million on its balance sheet, of which $149.2 million was in Bitcoin, and the rest was Ethereum, fiat, and USDC. The decrease in stocks of the first cryptocurrency is explained by the payment of Galaxy Digital's debt in amount of $60 million. This money was used to purchase the parent company of Banex and Motivate Services in order to launch the Exodus Pay platform, thanks to which users will be able to store and spend assets in one application. The idea is sound, but against the background of losses and failing market, it looks like an attempt to save a sinking ship with a new paddle. The main thing is that by the time of launch, users will still have at least something to store and spend. BlackRock's staked Ethereum ETF pulls $15.5 million in first-day volume. So BlackRock decided to keep up with the trend and filed an Ethereum ETF, which does not lie dead, but actually brings profitability. On March 12th, iShares Staked Ethereum Trust, the first Ethereum ETF with a staked function, started trading on Nasdaq. And the debut trading volume was 15.5 million, and investors bought 621,705 shares, and assets under management immediately reached $100 million. So how does it work? Let me tell you. The fund will block from 70 to 95% of Ethereum reserves and staking and pay the received rewards, about 82%, to investors on a monthly basis, just like dividends. The rest will go to trust, custodians, and service providers. And the standard commission is 0.25%, but for the first $2.5 billion of assets, the preferential rate of 0.12% applies now. At the same time, BlackRock is preparing the Bitcoin Premium Income ETF, which will sell covered calls options on Bitcoin futures to also delight investors with additional returns. In general, the largest asset manager in the whole world with $11.5 trillion is methodically turning the crypt into an ordinary financial instrument with predictable rewards. And now the main thing is that the staking does not fail and regulators do not change their minds. Bitget debuts GetClaw, a zero-install AI agent built for instant market insights. So Bitget has introduced GetClaw, an offline agent that doesn't need to be configured for hours. It just picks up and runs. Unlike the previous version of GetAgent, which only answered questions, this guy monitors the portfolio himself, analyzes financing rates, volatility, liquidation risks, and even macroeconomic events. If something important happens, he immediately knocks on the trader's door. Over the time, it adapts to the user's style, and it remembers position preferences, risk levels, and historical patterns. He's like a personal assistant, but he doesn't make coffee. He just counts money. GetClaw has more than 100 built-in functions in its arsenal: monitoring of Bitcoin candles at 5 and 15 minutes, automatical calculations of leverage and stop losses, backtesting of strategies, and of course dynamic averaging (DCA) based on market signals. And it works via Telegram, Discord, WhatsApp, and the Bitget app itself. And it will be connected in stages. Telegram will be the first. The web version was already launched on March 12th, and the mobile version will be available available at the end of the month. However, you can't teach real money in early access just yet, and the real-time trading feature will come up with the updates. And the Bitget CEO Gracie Chan promises that GetClaw will solve the problem of long-term tool configuration. Now, the main thing is that it doesn't start trading better than its creators. And that's all the news for today. I will see you on Monday. Bye!